Okay, what's going on? I'm gonna do a kind of strategy video, like my strategy for NQ, because actually quite a lot of people's been asking for it, like, oh, how do you do it? How do you do it? How do you do it? Well, here I am. I'm gonna tell you how to make all this money um from doing what I do. So the first lesson, okay, is daily bias, right? Where is price going? Where is the draws on liquidity? Which I'll talk to you about that soon. Where is price, wanting to go? Where is it mostly towards going to? So, okay, here's a good example. So, as you can see if I move this out of the way, and then just draw that up there. Where's price going? Here, up, right? This is on a higher time frame. Okay, higher time frame is always telling you where price is going to go. Okay, so don't bother looking at the 1 minute, the 3 minute, the 5 minute, 15. Only focus on the 1 hour, the 4 hour, and the daily time frame, and that's really going to show you where price is really wanting to go. Okay, so this is obviously going up, as you can see. This is called bullish price action. Up, bullish, and down is called bearish. Okay, so this is obviously going up. Okay, so what we would look for in this scenario's trade is if we were on the 4 hour, okay, so if we go here, right, this is the second part of your strategy. Okay, so you got your price action, daily bias. So we've got our daily bias, okay, coming into the day, and then we're sitting here. Oh, what's that? See this gap here? Right, really listen to me on this, okay? Really listen carefully, okay? So you see the way that I'll draw it. See, there's a wick here, right? There's a wick down here. Okay. You see how that's creating a gap? Okay, I've marked out the white box and two black lines, right? This is called a fair value gap, okay? And this is when this is a 3 candle pattern. So you've got your black one here, you've got your grey one here, and then you've kind of got like a wee small black one here, okay? But you realize how, oh, this is a fair value gap because this wick, which is, you see that little tiny thing here, like right there, is not overlapping this wick here, okay? So the first and the third wicks cannot be overlapping each other. So this means the second candle is creating a big gap. This is called a fair value gap, okay? So price loves to create these, and then as you can see, it got traded higher, and then boom, got traded down here, and then it got a lovely reaction off it, shooting it way higher. Okay, so this would be my second part of my strategy. This is called a fair value gap. I'll show you what isn't a fair value gap. So right here we've got one candle here, this black one. We've got one candle here, this grey one, and we've got a third candle here, this grey one. Okay, the reason why this isn't a fair value gap is because that this wick is overlapping this tiny wick here. That is not a fair value gap. Okay, this is a fair value gap. Okay, so basically that's 2 parts of our strategy done. We've got our daily bias, price is bullish. We've got a fair value gap. This is a bullish fair value gap in this scenario. I'll tell you how this is a bullish fair value gap, okay? So this is a bullish fair value gap because I'll try and find a bearish one. If there'll be one. Yeah, there's a bearish one right here. Okay, so the black candles, this is a down pattern, okay? Gap here, you see? This one got disrespected because we were too heavily bullish. Price action was too bullish, but anyway. So what you could have done here, the wick here and the wick here is not overlapping each other. Okay, so basically this is what we do. Right, wicks aren't overlapping each other. You see, fair value gap is formed, and as you can see, the price traded into it on the very next candle, and then it displaced lower. That's what this is. It went lower, and that's a bearish fair value gap, but this one got disrespected because price was too heavily bought. There was too many people buying it, so therefore it did not work out. So where's this one? Okay, so this is a good example. We've got our bullish fair value gap here. Okay, as you can see, it clearly got respected here. Price came back down and respected it again. Okay, this is going to be an intermediate low, but we'll talk about that different. Okay, we're talking about daily bias, fair value gap, and inverse fair value gap in this video only. Okay, so as you can see, we got this reaction, beautiful reaction, but we don't enter there. We don't just buy as soon as price goes there. So we don't enter the trade just because price goes there, right? We need one more thing for confirmation. Okay, where the I'll find this one sec. There we go, we found it. Okay, another thing you know is going to be a very good fair value gap is whenever all of the kind of higher time frames create the same fair value gap and respect the same fair value gap. So for example, we were on the 4 hour there, we are now in the 1 hour, and it's the exact same on the 45. I'm not going to do that because it's just bugging the whole thing up. But just take my word for it that it's on every kind of time frame from the 4 hour, the 1 hour, 45 minute, the 30 minute, 15, and that's how it's a very good fair value gap in my experience. That it's very good to trade off, and as well as this, we need to spot something called an inverse fair value gap. Okay, so this one's a little bit more complicated. Okay, so first of all, number one, we've got our daily bias. It's going up. Price wants to go up on the higher time frame. The bearish fair value gaps are getting disrespected. They're getting traded through. It's not trading downwards. ES, which is, we've got M and Q here, and ES is the other currency that really likes, the other stock that really likes to correlate to NQ, which we trade. So if ES does something, NQ do it too, and whenever that happens, it's very high probability that that will work out. Okay, so we got our fair value gap there. So basically, let's get an inverse fair value gap. Let's just find one anywhere. Okay, so we've got an inverse fair value gap right here. Okay, inverse fair value gap. This is a 3 minute inverse fair value gap. Okay, we're on the 3 minute. You usually do these the 5 minute, the 3 minute, or the 1 minute, because that's golden inverse fair value gaps. There's no reason why you should be trading a 1 hour inverse fair value gap or a 15 minute. They just don't work. Okay, 1 minute, 3 minute, and 5 minute fair value inverse fair value gaps only. So as you can see, what happened here? We've got a fair value gap, a bullish fair value gap, and what happened was price completely disrespected it. It just closed through it. Okay, so whenever we get, I'll mark it out with this black line, whenever we get a full body candle closure, so this is whenever you see the black candle close below that white box, that is whenever we would enter shorts, which is sales. That's whenever we would enter sales, and if we did enter that, well, we would have won the trade. Okay, because we got our 4 hour fair value gap, we got our, first of all, we got our daily bias. Okay, in this instance, in this chart, this specific place on the chart, it was sales. So we got our 4 hour, 1 hour fair value gap. Okay, I got respected, and then we got a 3 minute IFEG, which is an inverse fair value gap. So the candle closed below that white box, creating an inverse fair value gap, meaning the fair value gap is no longer tradable. So we enter shorts there and bang, price delivers lower, hitting all this low resistance of liquidity to the left of us. Okay, Like I know this is so hard to like what the fuck he talking about, right? Probably like majority of people, if not everyone that's watching this is gonna be like, what the fuck is he talking about? But this is quite literally the strategy that makes me thousands a month just by following this simple strategy. Um and if I'm not that good at explaining things, just please tell me and I'll try my best to do better because I'm trying to make a series. Or just watch someone else, to be honest. Like PB Blake is where I learned from, and he's the best strategy that I've ever seen in my life. Like honestly, it's so simple. He makes it so simple to understand. But yeah, literally what my strategy is. Obviously, I've got more things, more confluences is what you would call them. So say you're what was I don't know what the fuck I'm talking about, right? But confluence is whenever, say, these things add up. Daily bias, one, okay. Fair value gap, getting respected, two. Inverse fair value gap, three. That's a really strong trade anyway. But to make it even stronger, we add things in called intermediate highs, change in state deliveries, SMTs, things that are just like what way more probable to for this trade to play out that I've just, as you can see here, um, and we will go over that. It's just we're getting the basics down first, okay? So yeah, literally daily bias, it was going up. 4 hour value gap got respected, and this is we're selling this, right? So it may seem confusing, but it's literally like one of the only inverse fair value gaps I could find, and I could not be bothered going back there. So in this instance, it would be a 4 hour fair value gap or 1 hour up here. The daily bias would be bearish, meaning the price is going to go down. You could obviously see it if it's going like that. And then we got an inverse fair value gap, and then we would enter after that candle closure, targeting this low resistance liquidity right here, or high resistance liquidity right here, and then bang. This is actually the exact same trade I took today. Monday 20th of July is the exact same trade I took after that. But yeah, that was literally my strategy. So that I'll just cut that video like 15 minutes long there. But take notes as my number one thing. Take notes and watch it until you understand it. Start implement it into your own charts. Um, and yeah, that's literally that simple of how I make thousands and thousands a month, just by doing this strategy every single day at 2:30 p.m. to 4 p.m. every day. That's it. And I make, you've seen it. I post all the videos. I don't need to tell you anything. Don't need to show you my bank, nothing. Um, this works. It's literally that easy. So just practice. Make sure you're journaling every single day. Doing your homework is what I'd like to call it. Do your homework. What I want you to do is go into the chart, find a 4 hour, 1 hour fair value gap, get the daily bias right, wherever it's going up or down, get a fair value gap, get a inverse fair value gap, and remember, okay, it's the highest time frame fair inverse fair value gap in the leg. So this is the leg right here. There is a 5 minute down here, okay, so we don't really do that because it's gay. So 3 minute, bang, there's a 1 minute there, probably more than likely. Yeah, there's a 1 minute there, but a 3 minute again is more powerful than a 1 minute. So we get a 3 minute for inverse fair value gap, and enter after that candle closure, and then bang, take profit, 2k. So yeah, this will be part one. This is my 3-step strategy, and then we can go into similar things like each video I'll be doing. One video I'll be doing intermediate high, second video I'll be doing CISD, third video SMTs, ES, all that fucking bullshit. So I'll see you in the next one.